Welcome back to another video. This is Suhail and today I want to teach you how you can use Williams R% for trading. Williams R% is a momentum indicator that helps you in identifying overbought or oversold conditions and discovering changes in momentum. If you're interested to learn this awesome indicator, stay tuned and let's get started. Alright, here we go. We got Williams R% here below the chart. This indicator is scaled from 0 to -100 and actually it's an oscillator and it's moving above and below a center line which is -50 for this indicator. Williams R% is actually the inverse of stochastic oscillator. Stochastic oscillator is based on the level of the close relative to its lowest low, but here in this indicator the calculation of Williams R% is based on the level of the close relative to the highest high for a period. I don't intend to get into the calculations of this indicator and you don't need it because it's available to use in most of trading platforms and you just need to learn how to interpret this indicator. The default lookback period for this indicator is 14 and also the default level of overbought and oversold levels are -20 and -80. The default setting works pretty well, but you can adjust the setting based on your trading style and trading system or the market you're trading so the indicator better matches with your whole analytical process. Alright, now let's see how we interpret this indicator. As you can see, R% moves between 0 and -100 and -50 is actually the center line and it's an important level that you must pay attention to it. When the R% line is above -50, it means we have higher upside momentum. In other words, the bulls are in stronger position than the bears, so increasing of the price is more probable. And when the R% line is below -50, it indicates that the downside momentum is stronger. It shows that the bears are in control and decreasing of the price is more likely to happen. The other important levels that you must watch are -20 and -80. When we have high readings of R%, I mean the R% line is above -20, it shows that the price is near its high and this could possibly show overbought condition. And when it's below -80, it shows that the price is near its low and possibly showing oversold condition. Now let's talk more about overbought and oversold readings and how they can help us in trading. -20 and -80 are the default levels for identifying overbought and oversold conditions, but as I said, you can adjust the setting based on your trading style and trading system so it better matches with your analytical process. We continue with the default setting and please pay attention that the lookback period is also the default one, which is 14. So when the R% goes above -20, it means that the price is near the high of 14 period high-low range. For example, on this chart, the time frame is 1 day. So when the price goes above -20, it shows that if we consider the high-low range of the last 14 days, the price is trading near the high of this range or higher than that. This shows overbought condition, meaning the current price is near the top and this is bearish. So we expect declining of the price. It can be a reversal like what happened here after overbought condition and the uptrend turned to a downtrend as you can see, or it can just be ending of the advance and the price may go to a trading range. But please pay attention that overbought readings are not necessarily bearish, and when the trend is strong, the price may remain overbought like here as you can see, or you may see many overbought readings one after another without happening of any reversal, and the overbought readings only foreshadows the corrections or pullbacks, and after that the price continues its direction. And we have the same for oversold condition, but in the opposite direction. When the R% goes below -80, it shows that the price is near the low of high-low range for the past 14 days, and this shows oversold condition, and this is bullish, so we expect advancing of the price. If this is happening in a downtrend, it can be a reversal and turning of the price to an uptrend, or just ending of the declining and price may go to a trading range like what happened here. But please pay attention attention that similar to overbought condition I explained, this oversold reading is not necessarily bullish, and when the trend is strong, the price may remain oversold, or you may see many oversold readings one after another, and the oversold readings only foreshadows the corrections or pullbacks as you can see here. Trading based on overbought and oversold readings works better when the price is in a trading range and moving sideways, and when the price is in a trend, many of these signals are false signals. To filter these false signals when the price is in an uptrend, it's better to look for oversold readings and enter in the direction of the uptrend. By having this strategy, as you can see, we could have some good trading entries in the direction of the uptrend, and when the price is in a downtrend, it's better to take overbought readings and enter in the direction of the downtrend. Another trading signal that we can get from Williams R% is momentum failure, and this happens when the R% cannot move back to overbought or oversold territory, and this indicates that we are encountering a change in momentum and there is a possibility of changing in the direction of the price. When the R% goes above -20, this shows strength of advancing. The bulls were strong enough to reach to this high level of price, and as I explained, when the move is strong, it can remain overbought and repeating of overbought reading one after another. So when we have overbought reading more than once, I mean at least 2 overbought, and then after that it fails to pass the overbought level, this shows the upside momentum is weakening and there is a possibility for declining of the price. For example, here you can see that we have a strong move and some consecutive overbought readings, and after that it fails to move back to overbought territory, and this shows the upside momentum is weakening, and here it only foreshadows a pullback. The same goes for oversold condition. When the R% goes below -80, this shows strength of declining. It indicates that the bears were strong enough to reach to this low level, and if the move is strong, it can remain oversold and repeating of oversold readings one after another. So when we have oversold reading more than once, at least 2 oversold reading, and after that it fails to move back again in oversold territory, this shows the downside momentum is weakening and advancing of the price is likely to happen. For example, here following this declining, you can see we have some oversold readings indicating strength in the move, and then here it fails to move back to oversold territory, and this shows the downside momentum is weakening, and as you can see, after that the price goes to a trading range moving flat. After that, R% shows overbought and possible declining of the price, and as you can see, we have increased momentum and a little acceleration in the declining, but here again, after these 2 oversold readings, it fails to move back to oversold territory, and you can see how the price went flat after that. Williams R% is an excellent indicator that you can use for analyzing the market to identify overbought, oversold conditions and discovering changes in the momentum. But like any other tools in technical analysis, you shouldn't take your trading decisions only based on this indicator, and you must use it in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.